What is going on with mortgage rates? You may have heard mortgage rates are going to stay a bit higher for longer than originally expected. And if you're wondering why, the answer lies in the latest economic data. Here's a quick overview of what's happening with mortgage rates and what experts say is ahead. When it comes to mortgage rates, things like the job market, the pace of inflation, consumer spending, geopolitical uncertainty, and more all have an impact. Another factor at play is the Federal Reserve, the Fed, and its decisions on monetary policy. The Fed decided to start raising the federal funds rate to try to slow down the economy and inflation in early 2022. That rate impacts how much it costs banks to borrow money from each other. It doesn't determine mortgage rates, but mortgage rates do respond when this happens. And that's when mortgage rates started to really climb. And while there's been a ton of headway seeing inflation come down since then, it still isn't back to where the Fed wants it to be, which is 2%. Basically, long story short, inflation and its impact on the broader economy are going to be key moving forward. It's the longer term outlook for economic growth and inflation that have the greatest bearing on the level and direction of mortgage rates. Inflation, inflation, inflation. When will mortgage rates come down? It'll just be later than originally expected. In the simplest sense, what this says is that mortgage rates should still come down later this year. But timing can shift as new employment and economic data come in, geopolitical uncertainty remains, and more. This is one of the reasons it's usually not a good strategy to try to time the market. Trying to time the market is generally a bad idea. If buying a house is the right move for you now, don't stress about trends or economic outlooks. Bottom line, if you have questions about what's happening in the housing market and what that means for you, let's connect.